Welcome to Markets Now. I'm Michelle Rook along with Mike Zuzolo, Global Commodity Analytics. We had a mixed day in the grains, livestock futures mostly higher. Let's talk first of all about the corn market. Mike, some pressure and certainly export inspections were kind of part of the push, weren't they?
Yeah, they really were. And year to date on the inspections for corn, Michelle, we're looking at 30% light versus where we were last year at this point. And that's a really tough number to make up, especially given all the headwinds we've seen. Corn had a nice week last week, closing higher, I think mainly due to Mexico and their export demand. But when you look at USDA's number for the whole marketing year, we're down about 13% from where USDA says we're going to be at the end of the 22-23 marketing year. I think that's why corn continued to be the short side of spreads and really didn't want to go anywhere after that nice week last week.
So let me ask you though, funds have liquidated a lot of their length now. So is that going to take some of the technical pressure off that market?
I think it is, but I think at the same time, we're also seeing a more of an inter-commodity spreading, and we're seeing that hard red wheat bought and the soft red wheat sold. I continue to see the wheat as really the major key to unlocking the door for the corn market low to come in place because we've already had the harvest lows in soybeans. Why did we have those? Because we've got demand and a weather market in South America. Why aren't we seeing that in the corn? And I think the missing link is the demand side of the equation and the funds who are not ready to buy the wheat yet. In fact, they extended their net short position in that most recent commitment of traders.
Yeah, that's a head scratcher for me, as short as they are in Chicago. It's like historically short, isn't it?
Yeah, but one thing that was really nice to see, I think, was they extended their net longs in the hard red. So I
Yeah.
think they have the fundamentals right in terms of the funds and the managed money. They see the drought finally. I think they see what set the from the USDA chief economist Meyer said last week at the Geneva Convention that conference where they're looking at a situation where the wheat here in this country in the hard red market crop may be unrecoverable, and those were his words. And I would echo that, being pretty close to the hard red winter wheat belt.
Otherwise, Mike, do you feel like the wheat market is digested, the export deal being extended, and it looked like we did a good job managing the higher dollar today?
Yeah, I think it has. I mean, it's early on yet, but I think since the grain corridor has been extended, that deal it moved on. The market also is trying to move on with selling the rumor and buying the fact, especially in the Paris wheat market. I noticed a higher close after that deal was agreed upon, and then again on on Monday's trade, we saw a really nice move up about 3%. So they're talking about more demand coming into European wheat. That suggests maybe the Russians are done for now in terms of really pushing out a lot of volume.
And soybeans, really the whole complex was kind of under pressure early with rising COVID cases in China, but soybeans were really able to kind of brush that off or absorb it well. Was that because we did have such good export inspections?
Yeah, I think that, and also the South American weather, and I think they're kind of interlinked, Michelle. But I think you bring up a huge point. Is that, as I said, the soybeans, the cotton, and the hogs would be your most, and copper obviously would be your most sensitive China commodities traditionally. And what we saw in the soybeans on Monday, I think, was all demand or almost all demand. And the trade can say with that kind of demand, we have to have good weather in Brazil. About what, 3-4 weeks ago, we were probably about 16, 18% short on year to date export inspections. We've cut that to about 10% behind last year. So we have really made some headway thanks to that Pacific Northwest and that not being impacted by the river system.
And you mentioned weather. Argentina is pretty dry. Brazil certainly is looking better, though, isn't it?
It is. I think the southern parts of Brazil heading into Paraguay are going to still be on the radar map, so to speak, as we get into the holidays. And, you bring up a point about the weather. It's going to be hard, I think, for the trade to really digest the weather this week as probably volume gets lighter and lighter and lighter. So we'll probably have these big news items affect us more and more as we get closer to the Thanksgiving holiday.
Definitely. Cattle market had a pretty nice up day, obviously. Feeders were the leaders, but the cattle on feed report, that placements number, pretty bullish, and it helped push us today, didn't it?
Yeah, it really did. In fact, the feeder fat spread gained anywhere from $1 to $1.25, depending on which contracts you matched up. And that made a lot of sense. As you say, the October placement's the lowest on record, going all the way back to the cattle on feed report starting in 1996. that really fed the bull. But I think in terms of the fat cattle, the live cattle market, even though the cash market's still holding up fairly well on light numbers, as reported so far this week, we're probably seeing that marketing's number being digested by the trade is not really getting the job done in terms of feeding the bull. Especially, I think the trade's getting more and more nervous about the retail business as we get into the holiday seasonals here.
So you don't think live cattle will be able to take out those contract high areas then, huh?
Yeah, I think you ask a big question. I'm confident to say that this week it's going to be difficult because the light volume, that 154 and a quarter October high, is going to be really difficult to take out. If it would take that out, I think it'd be led by the support of the hogs and the feeders combined. I see the fat cattle similar to the soybeans. In order to get higher and break through, it probably needs the support of the other complexes.
So you mentioned the China COVID cases and that hogs held up pretty well today despite that. So what's holding that market together right now?
Yeah, the cutout's really doing a good job holding up. That can be traced back to the hams. It's had a steady incline in price action, so that suggests that the ham market and the featuring is really taking hold here due to the bird flu, due to the lighter numbers of poultry as we get into the Thanksgiving holiday. We also now, because of the pork cutout market, have the cash index at the CME about a $4 premium to the December hog future. So we've got a natural underpinning by that CME index being above in a positive basis versus that Dees hog contract.
The one market that did not fare well because of the COVID cases in China was cotton. I think a limit down day there. And boy, that market is so sensitive to that, isn't it?
Yeah, it really is. And I think the cotton market and some of the other commodities that I track that are maybe more softs like coffee, they're going to have, I think, increased volatility because their ranges are getting wider and wider and wider. And, even crude oil, we now in the month of November have taken out both the October high and the October low. And that means we probably can extend the rest of this month a lot of price ranges here just because of the crude oil market, and that's going to, I think, spill over into the exchange rate. So while we'll probably be lighter on volume, I think the volatility is going to pick up here as we get closer to the end of the month.
All right. Well, happy holidays then, right?
That's exactly right. And I hope you have a great one, Michelle.
Yeah. Thanks. Thanks so much for joining us, Mike Zuzolo with Global Commodity Analytics.